Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for May 29th, 2022. Hope you're having a great weekend. If you're in the United States, I hope you're having a safe and fun Memorial Day weekend. This is the weekend that here in America we celebrate and remember those who have given the ultimate sacrifice for freedom for our country. So we remember them. For the rest of you that are not in the United States, so I hope you're just enjoying a long weekend. It's going to be a it's like a long weekend for a lot of different places going into this next week. Some people, like in the UK, I think you're celebrating a spring break. A lot of people here in the United States are shifting to summer. So no matter where you're at, just hope you're having a great weekend and a safe weekend. Let's talk about a couple of things really quick. I wanted to mention, if you haven't seen our new website for the F.A.C.E show, as we call it, the F.A.C.E experience. It's the Forex Analytics Community Experience. It's FACE-experience.com. You can see this is the show that's free for you guys and gals. Every single day you can meet, our team who's usually on the webinars or the shows, excuse me, and you can read, some of the comments that we've had from the folks that we've interviewed over the years with Dale Pinkert. It's a wonderful website that we've created. Make sure you go check it out. Also, I guess I should mention that if you haven't checked out Forex Analytics, make sure you do so. It's only $1 for 10 days to try it out. And then you get the premium version of Forex Analytics. So no matter if you decide to go with the light version or with the premium version, you can get the premium version for $1 for 10 days just to try it. Make sure you download the mobile app. Actually, we just this weekend, I know I've been talking about it for the last couple of months. Just this weekend, we uploaded the new mobile app for Forex Analytics. So for those of you that are current subscribers, make sure you go to the App Store or the Google Play Store, download the most recent version of Forex Analytics. We've added a lot of new features. We've actually added the risk management calculator. All the Twitter integrations work really great. All the notifications, just the user interface looks different, and it's all been updated for you guys and gals. So check it out. All right, let's get started with the markets, and let's talk a little bit about this week. Well, first and foremost, I should say that this week is not going to be as easy as it's been the last couple of weeks. Now, I say that because for the last couple of weeks, most of you know, I've been playing the euro to the long side. I've been playing to the Aussie to the long side. So basically, I've been playing the dollar to the short side, as I felt that we're going to have a false breakout. We broke through this channel support. We broke through the 102.30 level, which was really key. If you don't know why it was critical support, I'll just show you really fast. You take the spike highs from 2017. That's January 2017. Spike high post-COVID. The lows that we created actually, 3-4 weeks ago was right here. And you can see right there on May 5th. That low was that trend line. And then we bounced from there to all-time highs. So I knew that the risk was, with the divergent relative strength that you saw up here, that the risk was that we were going to pull back and quite possibly break through this channel. We did. And now the risk is that the dollar continues to slide a little bit further. False breakout risks, failure at resistance over the last 4 years risk. The reason for that is really quite simple, is you're starting to see more hawkish rhetoric from the European Central Bank. You're seeing now just some cracks in the hawkish ranks of the Federal Reserve. So as expectations shift more hawkish towards the ECB, a little bit more dovish slightly to the FOMC, you're seeing that reflect in the euro dollar. You're seeing a big bounce in the euro dollar from the 103.50 level to the almost 108. And as a result, the dollar index is coming under pressure. All of that was great. And it was in my opinion, it was, if you've been watching here on the week ahead videos for the last couple of weeks, it's been easier to identify that move lower. The question is now, how far is the dollar going to drop? And that's why I think at this point in time, you have to be a little bit more careful. I still think that the euro has some upside potential. And I still think that the sterling, the pound sterling has some risk to move higher as well. And I think even the Aussie dollar, which it was a great purchase below 70 cents, is now, getting to some key resistance as we approach this 200-day moving average. And as we approach the 38% retracement of the last big major drop, this is all going to be very, very big resistance for the Aussie. I think as we get closer to that, you have to be more careful. And I know what your question is for me right at this moment in time. Your question to me is, hey, Blake, are we going to, once we get there, is it a good place to be on the short side? And my answer to you is, I really don't know. And I think a lot of it is going to be shown to us after this week. Why is this week important? Well, if you haven't seen it already, and if you're on the Forex analytics system, you just kind of scroll down through the economic calendar here. What you'll see this week is that we have the jobs report and the non-farm payrolls, obviously. And so, obviously the market's going to be paying attention to not only the headline number, but also the wage data associated with that. Then, we have all the ADP, we have ISM. We're not going to see services this week. We'll see the manufacturing ISM. We'll see services next week. But all that data really does now matter. And I think everybody is laser focused on, with this higher inflationary environment, is economic data going to continue to weaken? Because we are starting to see economic data slow down. We're seeing PMIs come in worse than expected. We're seeing, inflation stay persistently high. Now if employment starts to tail off a little bit, and we stop seeing, the jobs data so good, continuously strong, I think that's going to start to weigh on, sentiment, because right now the talk of the markets is that we are heading into a potential stagflationary type of environment with persistently high inflation but weaker economic growth. That's the stagflation has been the buzzword as of late. Okay, so now with that being said, you're seeing a rally in equities because the equity markets are sensing that the Fed might become a little bit more dovish, which will give us looser monetary conditions, if you will, and the stock market is responding appropriately. So when you've seen the reversals develop over the last couple of weeks, now you fast forward to today, and it's not as easy. It's not as clear cut. The questions are we going to continue, or do we sell into the strength of this rally that you're seeing in equities? You start to buy the dollar as the dollar is pulled back. Is this just going to be a new opportunity to buy dollars? And like I said, this week is going to be tricky. And it's really, I think by the end of the week, next week, after the jobs report, we're going to have a pretty good idea of how to trade the dollar. And I wish I could give you better guidance this week based on the guidance that I gave you the last couple of weeks, right? Like playing the dollar to the short side the last couple of weeks. It's been great, but now what do you do? And I wish I had a better answer other than, well, I'm not too sure. So, but that is the answer that I'm going to give you today. But let's look at some technicals just to confirm. Now, before I get into the charts and get into the more granular part of the charts, going through some fib levels, looking at some trend lines, I have to say, if you haven't visited our sponsor of the week ahead video, it is the Trader Funding Program. So make sure you check out the Trader Funding Program, especially if you want to learn how to have access to more capital, more trading capital. You have to go through an assessment period, but if you pass your assessment, you keep 75% of the profits, and we take the losses. but you keep 75% of the profits. But you have to pass the evaluation, and that means you, in a demo environment or in a paper trading environment, you have to be able to make 10%, but not risk more than 5% of a trailing drawdown or 4% intraday. If that happens, then your assessment is over. But if you think you can trade and you want to access larger amounts of money, check out this video at the very bottom of the trader funding program. Read through the FAQs and watch this 2-minute explainer video with me, just kind of outlining all the specifics about the trader funding program. It's been a very popular program for people that want to access larger amounts of capital. Maybe they don't want to trade their own capital, or maybe they just don't have access to it. So check it out, the trader funding program. Okay, back to your charts. So here's the S&P. Now, the S&P, let's all identify that we are back above 4,100. 4,100 was a big level for everybody. I called it the bull bear line in the sand, if you will, because when you're talking about this zone in the S&P, you had that spike low right here at 41, let's call it 4110, some lows right over, or so the lower end of this support zone, previous support zone, down at 4065. We were roughly failing at 4,100, and so a break back above that 4,100 might spark further interest in risk appetite. So the question is, how far can this market go, or are we going to go to all-time highs? In my opinion, with the S&P, the risk is that we can make it all the way back to the 200-day moving average. Now, if you take the high point, the all-time highs to our most recent lows, when we were down 20% intraday, the 618 retracement comes in at 44.44, roughly about 44.50. Now, I know some of you are probably thinking, I'm a little skeptical that we make it all the way up there. I am too. So the numbers that we really have to pay attention to, in my opinion, are going to be more at the 38% retracement around 4,200, or 43.25, which is the 50% retracement. I think both of those levels will offer the ability, if you want to be on the short side of risk, if you want to sell stocks, I think you're going to start to see the S&P find some major resistance up there. But is it the 38% retracement, or is it the 50% retracement? It's hard to say, because I think we're going to have to be looking at the data as it's being released to see if it's weaker or stronger data, and act appropriately. I will say this, and I know I've said this on the F.A.C.E show and the F.A.C.E experience. So if you guys remember, this is our free show that we do every single morning with not just me, it's our team as well. I know I've said this on multiple occasions, and I'm going to say it here loudly. And I've been saying it for weeks. Data matters. And now the market is looking, we're back in that mindset that weaker data is good for stocks. Why? Because the weaker the data is, the more dovish the Fed's going to be. And the less likely the Fed is going to be more aggressively raising rates. If the data comes in strong, then stocks will be a little weaker. And that means the dollar is going to be a little bit stronger, because the Fed will stay hawkish and they will continue to ratchet up rates at a more aggressive pace. I know it's counterintuitive when you're dealing with stocks, but that is the market that we're in. And if you understand that concept, then you'll understand how to deal with the data as it's being released. If the jobs data comes in a little weak and you start to see stocks ratchet up higher at the end of the week, you now know why. All right. Now, when you're talking about currencies, the euro has done a hell of a number on people. And thank goodness, a lot of us were actually on the long side of the euro, playing it to the long side. You'll notice that key support really held from the lows back here in January of 2017. But as we have said, that low held, but more importantly, it was the spike low post-COVID lockdown at 106.30. Once we broke above that, now the risk is that we move up towards the 108, maybe even the 109 level. Now, the reason why I say 108 or 109, you'll see these red trend lines that are coming in to view. Think about how important these are. you have a trend line from basically the creation of the euro to, current day, which would be that upper trend line that takes us to about 109. But you also have another trend line from 2016 lows to 2020 lows, again, post-COVID spike lockdown lows. That comes in around 108. Then you also have previous support back here in March that also comes in around 108. So when I give you a zone, this zone is probably going to be fairly important for the euro as we move higher. Now, I know what some of you are thinking right now. I'm a super euro bear, and I think the euro is going to parity. And that's how I feel. Hey, if that's how you feel, then use these opportunities for the euro back at 108, back at 109 to short, because that's going to give you a good risk reward to be back on the short side of the euro if it does fail. The flip side is the other ones, it's the weekend. And it's Saturday, and it's in the morning, so bear with me. For the rest of you that think that the dollar is going to go to hell in a handbasket and the euro is going back to 120, I think what you have to be is a little bit more careful as the euro approaches 108 and 109. But I think if we can break above the 109, and a quarter, this is the 50% retracement. We can break back above that 50% retracement and back above those trend lines. Then it starts to get more aggressive on the rally. Then you start getting traders starting to chase it. So again, if you're a euro bull and a dollar bear, then you're probably being more cautious. But we get above 109 and a quarter, this pair could quite possibly squeeze. Now, I know in the UK there's a lot of risks, and a lot of it is surrounding Boris Johnson, Bojo. So I know a lot of you are hesitantly playing the sterling, and I agree with you. I'm not a big fan of trading the sterling at this moment in time, but I thought I'd bring it up just because we are going to be facing some pretty key resistance as the pound sterling gets back to 128. That is that broken channel support that should offer some pretty key resistance. And let's do this really quick. You take the last big major move lower. Yeah, that 38% retracement comes in at 127.70. So that should offer some pretty big resistance for the sterling. Just have that in mind if you are out trading the sterling. Now, I know a lot of you are like, well, what do you do with the yen? Look, I'm not a big fan of the yen other than we are coming down to the breakout point. So as we approach 126, I think where the rubber meets the road is how does the dollar yen react once we get down to 126. And, if it reacts, if you're looking for longs and you're like, hey, I'm just shorting the yen no matter what happens, then, you might want to see what the reaction is at the 126 level. If you're in the camp, and I'm not going to tell you what camp to be in because I think it's a little trickier this week, as I've explained a couple of different times. If you're like, hey, I'm a bear in stocks, and that means I'm gonna be a yen bull, and I can't wait to buy more yen, then you have to be a little careful. But if we get back below 126, you might actually see an acceleration lower of dollar yen, because that would be a false breakout in the dollar yen. There should be some selling that comes in following a sustained move below the 126 level. So again, it gets a little tricky. So I went over the euro, I went over the sterling, went over the yen, even covered the Aussie a bit, and we talked about the S&P. Now, the one last thing that I think everybody should be paying really close attention to is Bitcoin. And not because I think Bitcoin's a great buy at the moment, but I look at Bitcoin as being a risk to risk assets. Bitcoin is sitting around the 28, 29,000, 30, we just call it the 30,000 mark. It's trading heavy. But if you look at any other crypto altcoin out there, a lot of you will call them crap coins. You'll call them silly, stupid coins. Maybe you might call them poo-poo coins. Maybe you might call, you call them something else? Well, you know what you call If you look at any other coins out there, many of them have lost 80 to 90% of their value already. But that doesn't mean that they can't go to zero. So the reason why I say that is there may still be more pain in the crypto space. And if Bitcoin drops from 30,000 to 20,000 or maybe even lower, then be careful with those crap coins, silly stupid coins, whatever you want to call them, right? So just be careful with any of those that you hold. Bitcoin's been under pressure. Ethereum's been, getting pounded as well. We're coming into some pretty key levels of support. And if these are broken, then you might see a further slide in the crypto space. And if that happens, as you've heard me say this for the last several years, the most risky investments in the whole marketplace have been the crypto space. And so if they continue to slide, that will weigh on sentiment and stocks as well. So that's why you have to always keep one eye on them, especially as we approach some of these critical levels of support. So guys, one thing I didn't mention to you, and I should, if you haven't checked out the Flow Show, then you show faux show, attack the Flow Show, because the Flow Show, I can't even say it. The Flow Show is analysis in the European hours conducted by Ryan Littlestone, K-Man, Stelios, and even though Ryan's going to be out next week because he's got some personal business next week, make sure you're there because it's a free analysis show of the markets, preparing you for the European trade hours and the North American trade hours. So make sure you're there. It's free. Why not? And plus you've got, decades of experience that are with you, covering the markets with you live. So Flow Show, be on the Flow Show. Flow Show, be on the Flow Show. Jeez. Anyway, I hope you guys and gals have a great Memorial Day weekend and a great long weekend. And if you're not celebrating the Memorial Day weekend, I hope you just have a wonderful weekend. Safe, and enjoy your friends and family as always. Thanks for spending your time with me. Make sure you give us a thumbs up, subscribe to the channel. I'll catch you on the F.A.C.E show on Tuesday. Thanks, everyone. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.